Index funds vs. real estate, making investment choices. Investing in index funds and real estate can both be great ways to generate wealth over a long-term period. But which one is right for you? In this video, we'll take a look at the pros and cons of investing in index funds and real estate. Index funds. Investing in index funds, such as the S&P 500 or Dow Jones Industrial Average, gives investors exposure to a broad range of stocks. This means that an investor can gain returns from companies in all kinds of industries without having to buy individual stocks. Index funds also tend to have low fees, making them attractive to investors who don't want to pay high investment costs. Think VOO and VTI with low expense ratios. Additionally, index funds are often more liquid than real estate since they can be bought and sold easily. Real estate. Many investors prefer real estate because it offers potential tax benefits, provides diversification from the stock market, and has been historically steady with regard to appreciation. However, buying real estate requires a larger upfront investment and higher maintenance costs than simply investing in index funds, not to mention greater risk. Additionally, flipping properties, buying and selling quickly, isn't always profitable or possible depending on your resources. In conclusion, both options offer unique advantages and disadvantages. It's ultimately up to the individual investor to decide which choice is best for their financial goals. Be sure to do your research before investing so that you can make an informed decision. Today, 80% of my investments are ETFs.
Please subscribe to our YouTube channel and never miss out on our latest content.